And this is where investors overlook. They were so hyper-focused that I missed the first entry, so this development cannot buy already. But what I want to share with you here is that there is different exit point. If we get the right exit point, we could even make more than someone who buy it at the right entry. Case study on the second one over here, we talk about the value, okay? Applying the right entry strategy in an urban transformation demographic. So in this instance, we talk about the buyer's profile. It's upgrading. They are upgrading from a 5-room HDB flat, okay, to a new build development. So the goal and intent here, equity on hand, and of course the intent of their purchase. Equity on hand is getting from their existing HDB flat for sale, a 5-room in Sengkang. The intent of their purchase is a dwelling property with good paper value gain. So you can see that this dwelling property with good paper value gain is a very common so-called buying intent. All right. So for Kelvin himself, just like he has more equity, so he can do Sophia Hills. But in this particular instance, it's a 1-for-1 exchange. And then what is their intent here? They want to be near St. Andrew's Primary School. All right. And at the same time, it must be immediate. That means when I sell, the product must be TOP, but at the same time, I do not want to buy from sub-sale from someone else. I want to buy directly from the developer. And that's where you got to look at remaining inventory. Very much like what Kelvin has also bought into, right? And it must be a value buy. That means today buy, it must have headroom for growth. Okay, so what are the market demographic? We're going to match the marketplace to the profile over here. Again, when we do that, what is the buying strategy here? By applying urban transformation fundamentals. So over here, we talk about the venue. It just has the announcement that it's going to transform from a cemetery to a new town called the Bidadari town. And that was announced in year 13, which is 4 years before. Okay. And then Woodley, being the last plot of land, has just been released by the government and also bidded by SPH and Kajima. And the land cost was 1,000 plus PSS for integrated development. All right, and from there we were able to determine what's the future price as well. Of course, 2,000 plus again. All right, because it's an integrated development. And then next thing, it also, when we bought in, that was also at the same time where Raintree just got en bloc. Okay, Raintree is the current river along Potong Pasir Avenue 1, I think. All right, so we just have the announcement that Raintree just got en bloc. So I just told the investor here that, hey, look, you know, Raintree just got en bloc. We know the future selling price already for this development, and that could be something for us to leverage on. Okay, so with that, they say, okay, KAS makes sense. Okay, but makes sense in the sense that these attributes of the development, more like the stay, that means can move in right away. And also near primary school was what they were more comprehensive with, okay? But they say that, okay, the en bloc, all these things they can't see. So I just want to show you how it makes sense here, all right? So again, they bought into the value. And over here itself is for dwelling with good paper value gain, must be near St. Andrew's School and must be immediate. And we then apply the multiple exit strategy time to its transformation milestone. So to give you some context, this is how the announcement in 2013 in Bidadari has transformed the cemetery to become a new town over here. All right, a lot of so-called HDB flat BTOs have been up. All right, and also the Woodley residences is up as well, along with Park Colonial just across the MRT. So over here, this is a chart that I shared during the last webinar, and just a quick recap here. We talk about consumer behavior. It's actually shifted from buying a resale to buying new homes. All right, so in year 2013, okay, where the announcement of this Bidadari new town was announced by URA, at the same time, transaction volume happens to be in the primary sales. That means new launch. Okay. So even with a forced exit, so what happens here? The seller themselves, they met some unfortunate circumstances and they need to sell. Okay. So over here itself, even with the forced exit, can you still make a profit? All right. And where's the forced exit? So again, we talk about the recap here is Sengkang HDB flat. Want to buy a new build near St. Andrew's Primary School, Sun to enter because they want strong capital gain as well with good value. So they decided on the venue 0308 in 2017 and venue just TOP. Okay, so you can see the stamp certificate here. Okay, it's 8 Taitung Crescent 0308. All right, all the important details, PDPA, I've actually erased that, so you can't see that, but I just want to show you the date and also the amount that they purchased, 1.489 million. All right, so with that, 0308 was purchased at 1.489 million, you see over here. All right, it's the PSF itself is 1293 PSF. And they were asking me, yes, you sure not buying at about 1,003 PSF? I can sell higher next time. And I'm buying the third floor. Okay, so with the unfortunate circumstances, they needed to sell. And just nice, they entered in April and not March 2017. Why? Because in March, government has actually relaxed the seller's stamp duty rule. All right, so if you bought in March 2017 and before, what happened is that your seller's stamp duty was still 4 years. All right, they bought in April, so the seller's stamp duty was adjusted to 3 years. And because of the unfortunate circumstances, they need to sell 2 years later, which means they were still abiding to the last year of the seller's stamp duty, which is 4%. All right, so even with that in mind, can you tell that even with the forced exit, they bought in 1.489 million at 1,229 PSF, they sold it at close to 1,005 PSF at 1.725 million. And that is a 15% capital gain in just 2 years. But of course, talk about net gain here, we minus off the 4% and of course the 2% to sell their place, they still get about 8 to 9% plus one. All right. So with that in mind, I just want to share with you that even in the worst circumstances, with the right urban transformation, demographic, and investment fundamentals, even you have to do the forced sale, right? You are still, your risk is being mitigated. All right. It's in a way being calculated as well. All right. So very important, we do not want to basically buy into something and then when you sell and you're forced to sell, basically you lose even more than what you put in, all right? So key takeaway from this particular case study here, even without the best exit, okay, urban transformation fundamentals can give you the right edge. Buying the right size for the right location is crucial. In this instance, what do we see? Home investor means what you're going to buy a 3-bedder, and just now what you saw was a 1184 square foot unit. Okay, that the home investor has bought into Potong Pasir, the venue. All right, and why is it so crucial? Because it's actually in the middle of 2 reputable primary schools of 2 different genders. So one is St. Andrews, which is the son. They have daughters as well. So the daughter will then, of course, aim for Cedar Primary School, which is also within 1 km within the venue itself. All right, so buying the right size, the right location will then give you the seller's advantage. All right, so it's very important over here. I want you to remember this as I play this thing, okay? You can do a screenshot if you want to, all right? So over here itself, I just want to share with you that buying the right property with the 5 urban transformation fundamentals will mean you 50% of the battle, all right? Making the right exit will make it 100%. You see, we want to have our risk being mitigated when we find the right entry, right? Correct or not? That means knowing the margin of safety. But at the same time, if you want to optimize your return, you got to make it 100%, right? And that's where we find the right exit. So don't just have the first half but you miss out the second half. And sometimes, can I just tell you that the second half worth more than the first half. And this is where investors overlook. They were so hyper-focused that, I missed the first entry, so this development cannot buy already. But what I want to share with you here is that there is different exit point. If we get the right exit point, we could even make more than someone who buy it at the right entry. Just like what you saw just now for Kelvin's example as a real case study.